Hi there, good morning. You've tuned into ET Now, and this is Buy Now Sell Now with Michelle D'Souza. And before we move on to taking all of his stock-related queries on the show, IPO-bound Ola Electric plans to invest about $100 million in the first phase of building its Giga Factory for producing lithium-ion battery cells. This is what founder and CEO Bhavish Aggarwal said on Saturday. He also added that Ola's electric scooters will feature the locally produced battery cells as early as next year. But ahead of that, the company took us on a tour of their future factory in Bangalore to experience Ola Electric's latest products firsthand.
A lot of moving parts, but the FAME subsidy, the government has indicated a certain trajectory, and we support that. And if you see, about a year and a half ago, it was 60,000 per vehicle, and now it's about 10,000 a vehicle. But the industry has grown in that period. And you know why I believe the industry has grown? Because the consumer is clear that EV is the future. The consumers are actually increasingly preferring EV over ICE globally. And you mentioned global trends and all, but if you look at the data, even globally, right, with a little bit of ups and downs, cyclical movements, structurally the industry is still growing very fast because the EV proposition to the consumer is actually a great proposition. You have a vehicle which doesn't vibrate, it doesn't tire you, it has better acceleration, torque, and better cost of ownership because the usage cost of EV over petroleum or ICE vehicles is so much better. In India also, India began its EV journey only a few years back. And when we founded Ola Electric 4 years ago, we founded with the mission that we really want to do our bit to make India a global EV hub. Because India is a country of consequence. India is 20% of the world's population. So India needs to really build its own EV paradigm, its own products, and its own core technology in the EV stack to become a large part of the global EV revolution. And that's what our mission is, and that's what I believe the opportunity is for the whole industry in India to really contribute to this EV future. We started selling products only 2.5 years back, and in 2.5 years, you have seen how the industry has grown, how our volumes have grown, and how, like you said, our market share has grown. We have also built a strategy of really doing deep technology in-house and deep vertical integration on manufacturing, which helps us bring better products, lower costs, and higher scale.
But Bhavish, this 50% market share with the competition coming in, we are seeing that the companies are trying to give more benefits to the customers. They're decreasing the prices of the EVs. And of course, there are some of the incentives that you are enjoying right now. But how do you see the market leadership for Ola Electric in the times ahead? This 50% is defendable or a little doubt there with the competition, of course?
See, if you look at public Vahan data, you'll see how the market share has grown. Our market share has gone over the last 24 odd months.
Yes.
And I think you yourself said wo ek hi direction mein gaya hai, and I don't want to comment beyond that. Now, people have entered the market, and abhi to ye EV penetration ki shuruaat hai. India is the world's largest two-wheeler market. 20 million two-wheelers a year are sold. Over time, EV penetration will grow to a much larger percentage in the overall industry. And there is no one single company which can achieve that full transition. The whole industry has to come together for building a future of clean energy, better solutions for the consumer, and global leadership for India. We are investing behind this. I do expect the incumbents also to invest behind this. And अगर लोग इन्वेस्ट नहीं करेंगे तो पीछे रह जाएंगे. अगर करेंगे तो in the end customer और industry सबके लिए अच्छा है.
All right. Would like to know more about your investment strategies and the R&Ds. But before that, Bhavish, one of the very exciting parts is the Giga Factory that you are building in. We did had a visit of that. But Ola has been into the transformational journey because back, like so many years back, you started from a cab and a ride-hailing company, then all throughout. Who must have imagined that you will enter two-wheelers, then Giga Factory? But Bhavish, you are indeed a visionary and you have been building for so many more years. How do you see Ola 6-7 years down the line, will that be a majorly two-wheeler company? Will that be a cell manufacturing company? Or maybe some new tech? What will have the most sustenance?
See, in the ICE era, the internal combustion engine era, which is what has defined the automotive industry for the last 100 years, in that era, the core technology was the engine, the internal combustion engine. And those companies which had the engine technology were able to build very large automotive product portfolios, ecosystems, scale, market cap, whatever. Now, in the EV era, while you have to build the product also, the core technology, the similar thing for the engine in EV is the cell. So when we set out on this journey on Ola Electric to build this EV transition for India, we decided that not just do we want to build the products, we also want to build the core technology, which is this lithium cell. And a lot of the product features and product performance depends on the cell. For example, how fast can you charge? How much energy and range does it have? What is the life of the battery pack and the cell and the vehicle? All of this depends on the cell. So we decided 4 years ago to start investing into the cell technology. And today we are actually at a very much more advanced stage. In our battery lab, which you visited today, you saw us developing the core technology. It's all indigenously developed. We have built a cutting-edge 4680 cell technology here in India. We are one of the few companies in the world who has successfully developed it. Then, in addition to the lab, we've now set up the Giga Factory, which you saw again. You saw that we are at the trial production now. The trial production completes through the next 6 to 9 months, and early next year, we will commence commercial production and put our cell into our own vehicle. Now, in addition to this, we've also recently crossed a very major milestone in our Giga Factory journey, which is the BIS certification of our 4680 cell, which is, again, it demonstrates that we meet all the specs, safety standards, etc., performance, quality. Again, a major milestone in this journey.
But with this PLI scheme, 20 gigawatt is the capacity that you are aiming at in the few phases. But apart from that, how much of this could be used for the captive, and how much you are looking to cater to the needs of the other companies? And in the passenger vehicle segment, what we are seeing is that companies are definitely outsourcing, but in the two-wheeler segment, the market is not that developed in terms of outsourcing that. So why do you feel that the companies will come to you to give you orders?
So I'll start with the PLI. So we have been given the largest allocation of the PLI by the government, 20 gigawatt hour. And we have actually moved along as speedily as we could have to deploy the factory. Our phase 1 out of the 20 is 5 gigawatt hour. And within 5, 1A is 1.5 and 1B is the remaining 3.5, the total 5. Now, by the time next year we deploy 5 gigawatt hour, that would be enough to serve our requirements of more than 1 million two-wheelers. And we will, because each vehicle has roughly 3 kilowatt hour, so 3 into 1 million is 3 gigawatt hour. So we'll have surplus capacity which we can provide to other automotive companies or even to other industries like energy storage, etc. Now, because we have frontier technology with the 4680 cell, we do believe our proposition there to other potential customers will be relevant. But that's a bridge we will cross when we get to that capacity.
All right. And last couple of questions, Bhavesh. Ola has been an exciting company. We all know that. And much excitement was related to the passenger vehicle and the EV cars that you, a couple of years back, you did showcase and the plans were discussed. But no mention in the DRHP. Why so? Is that shelved off? Will that not be a part of Ola Electric, or is this something that you're keeping for the future?
We've never publicly spoken about anything regarding a four-wheeler. We've been very focused on a two-wheeler. We keep exploring concepts and all, and maybe at some event we have shown a video concept or something.
Yes.
But our very strong focus is to build the two-wheeler ecosystem, and that's where we started with the scooter. And now, after achieving a certain market share and penetration, we have focused on the motorcycle. And our focus as a business is to step-by-step build different automotive verticals, where we can significantly contribute to increasing electric penetration and having a good market share.
Does that mean, is that something that you're keeping for the future?
We'll see in the future.
All right, we'll wait for that. But coming to the motorcycle segment, very interesting, and we did see some of the prototypes there. The market is very niche, just a couple of players out there. But Bhavesh, with the bikes specifically in the rural India, people want to travel for the faster distance. So for the rural market, how do you feel that the market will develop for these particular products, or it is the urban market that you want to start with?
a lot of our scooters also, Shrishti, are being sold in rural India.
Rural, yeah.
Because we have, close to 1,000 stores pan-India. Many of them are in the hinterland or smaller towns, etc., or even the rural markets. So a lot of people in rural markets actually like the fact that it's EV because, again, the cost proposition is very relevant. Bikes also, by design, bikes are more rugged because they have bigger wheels, etc. EVs, maybe the same benefit is there. And the bike in the rural markets, again, provides the same benefit of lower cost of operations. So I do expect rural customers to significantly like the bikes as and when they come, and we'll see how the market grows.
All right, and Bhavesh, Ola is one such company that with such a large workforce, you're still managing to grow at a phenomenal rate. But apart from that, one of the concerns that investors have is the high attrition rate. Almost 50% is the attrition rate. Why so, Bhavesh? And the other one is, how do you manage that? How do you manage to still grow at such a rate? And
sure. See, for your viewers to understand our organization structure and hence in that context attrition, we are a very vertically integrated company. So we do on the back end, which is manufacturing, a lot more in-house manufacturing, components, and now the cell also. And even so in the front end, we don't do dealership-led distribution. We have our own sales outlets. We have our own service centers all across the country. So as you can imagine, we have a lot more workforce in the two ends, the back end as well as the front end. And especially the front end, which is distributed across 1,000 odd places across the country. And those are more field force workers, etc. So that's where a larger part of the attrition comes from. At the center, the R&D, the corporate leadership, etc., is much more stable. We have very senior people. We have people who have been with the company for many, many years, and those who continue to grow with us.
All right, and lastly, Bhavesh, since we're talking about the IPO and you're also offloading some of the stake out there, but much of the anticipation is around what will you do with the money, because as you mentioned in some of the PCs as well, that Ola is maybe your first child, is still what you live for. So, and you have also disclosed some plans regarding AI as well. So, any thoughts on where's the plan to put in some money in some future tech? Or
as an investment office, I will decide what to do with the money. I don't think I would like to share my investment thesis with the public out there. But the IPO is actually a largely primary issue. We have in our book put a 5,500 crore primary issue, and the offer for sale is actually a very small part of the overall issue. And my shares are a prorated percentage of that largely. Everybody has to offer a certain amount of shares. So it's in that light I expect people to understand.
Welcome back. You're watching Buy Now Sell Now on ET Now. I'm Cheryl D'Souza once again, and with me again I have Shrishti Sharma. And Shrishti, looks like you had a very tiring weekend, isn't it? Given the fact that you had gone and visited Bangalore and that Ola Electric Giga Factory.
Well, certainly, Cheryl, it was very exciting to see what Ola is actually making, but I feel that the major part will be execution, and we did interview Mr. Bhavesh Agrawal as well. So big plans and all eyes on the IPO.
Absolutely, all eyes on the IPO, all eyes on the markets actually for now. If you look at the markets, 24,000 above those levels. In fact, we're approaching 24,100 in today's trading session, near that all-time high for the Nifty index. Markets are holding on to the positive territory as of now. But let's kickstart taking all of the stock-related queries on the show. Remember, viewers, you can connect to us live on the WhatsApp number that will be flashing on the screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that as well. And along with that, if you've already purchased the stock, then mention the buy price, the quantity, as well as the time horizon that you're looking to hold the counter in your portfolio. In that way, our experts will be able to help you better. And talking about our experts today, then we have Kunal Bothra, who's joining us on the technical front, while on the fundamentals, we have Ashish Maheshwari. A very good morning to you, Kunal, as well as Ashish. I hope you all had a very exciting weekend like most of us did. And in fact, in a short while from now, we will also share with you all a secret clip. If not, most of them have watched it, but we will talk about the cricket in some time. But let me start with the queries then, and this one is coming from Geeta from Dubai. And Kunal, this one is for you. PNC Infra is the stock that she's asking about. 800 shares at a price of no price, but she's with a profit of about 30%. So should she stay put with PNC Infra or look to exit now?
30% profit, which means so closer to 375, 380 is where your cost price is. The stock is at 480. Recently, the stock made a high which was closer to 550 mark, and that too on the back of some higher volumes. And generally, we've seen that historically when stocks make a new high on the back of higher volumes, go into a corrective phase, these stocks, they eventually make a strong comeback. Now, it's a matter of time, maybe 1 month, 3 months, 6 months. That's difficult to anticipate, but I think at current levels, I would suggest a hold and wait out for a point where the trend picks up again for PNC Infra, and if it gets closer to say 550 odd levels, better levels for you to book out full profits.
All right, moving on to the next query, and this query is actually coming in on IOC. And Ashish, very good morning to you. And the query is on coming in from Mohit, where he has bought 1,500 shares. His buy price is 77 rupees. So he is sitting at a decent profits in this one, but his time horizon is for the next 2 years. So what's your advice coming in on this counter?
I think almost you have entered into this stock at 52-week low level. So congratulations to you that you made a prudent move and bought this blue chip stock at such a low price. And in my view, you continue to remain invested in OMC stocks, though slightly for a few days it is out of flavor now. But I think OMCs will keep on performing because oil, ultimately, the crude prices are not going anywhere. So these companies will continue to do well. And in my view, you can continue to remain invested with 2 year time. If you are having 2 year time frame, target will be 250 plus.
All right, the next query that I have is coming in from Vivek, and he wants to know about ABFRL, Kunal. The buy price is 220 rupees per share. Actually, not for you, Kunal. I'll take this to you, Ashish, because he wants to know whether he can stay put with ABFRL for the next 5 years or so. He wants to know what sort of a target can he envisage for this particular counter. But for 5 years, continue to hold on to ABFRL. Will be able to hopefully see a double price on this one. Ashish?
See, like how in telecom sector there are three players: Jio, Airtel, and Vodafone. In fashion industry also, if you see, you will have ultimately all major thing cornered into three names. That is Jio, Trent, and ABFRL. So, and the way consumption is going up, these companies will continue to, flourish or open new stores and come out with new brands. So ABF will, again, I'm very bullish on this particular sector, and these companies, both if you see Trent and ABRFL, have delivered very good returns. From 200, stock has moved to 320, 335 recently, and it will continue to do well. So remain invested here. By this year, and you will see 400 mark in this stock.
All right, then moving on to the next query, and this one is coming in from a viewer named Kunal, and he says that he's a professional cricketer, just 23 years old. So kudos to that. Quite a good day that you're sharing this information. But Kunal, coming to you for this query, he wants to know about BHEL. He is already sitting at a 21 profit in this counter right now. Will that be a sell and make a switch to any other company or stay invested?
Well, yeah, I think on BHEL, I think it's a good stock where you should look to hold on. I don't, see the stock getting into any major corrective phase over the near term. There was a point where BHEL became overbought. I think a month and a half out back when the stock had hit 310, 315 odd mark. From there, we saw, a sharp correction start the month of June. And now the stock is stabilized. So what it's going through is more of a time-wise consolidation or a correction for BHEL. It may probably continue for another few more weeks, but the longer-term charts are very positive for the stock. So I would probably suggest that if you're a medium to long-term investor, or you can extend or extrapolate your time horizon, it's a good stock to hold on to.
All right, this next query that I have is coming in from Binoy, who's writing to us from Kochi, and he has about 500 shares of Atul Auto, which he's purchased at the levels of around 600 rupees per share. He wants to know whether this stock is worth holding on for the longer term. What's your take coming in on this one in particular? Ashish, Atul Auto, do you think it looks pretty bright for the future? 600 is the buy price.
Yes, if you see even today, stock has touched 52-week high also of 720 plus. And in my view, these companies, because again, Auto is coming from lower base, though profitability is moderate, 4-5 crore, but they will continue to do well because the way EV three-wheeler demand is picking up, where this is having a major market share also. So my suggestion will be to remain invested. 1 year target, if you ask me, will be 1,000.
All right, then, great moves on Atul Auto. We're moving on to the next query, and this one is coming in from Krish. And Ashish, he wants your advice specifically on ITD cementation. He's holding 100 shares, buy price is 426 rupees. Wants your view on the stock. He wants to stay invested for the next 3 years. Will that be a good strategy?
100%, one of the blue chip company, ITD cementation, again, stock has touched 52-week high, and consistently it has performed very well. Even last quarterly numbers were very good. Almost quarter over quarter, we saw 75 to 90 crore profit went up in ITD cementation. So it's again a proxy play to how real estate and cement sector is faring. So just remain invested here. And my target for this stock in next 1 year is 750 plus.
Kunal, this next query is coming from Dean. He's writing to us from Goa and he wants to know about Tata Motors. Looks like he's heard you because his buy price of Tata Motors was 400 rupees per share. Now he wants to know what should he do with the stock. Continue to stay put with this one or book out partial profits? What strategy?
I think you should hold on to it because the best part is that the stock in the last 5-6 months has gone through a time-wise consolidation. So I think closer to 1,000 plus levels. It mentioned that the stock is getting into an overbought territory, so which means that it could be ready for at least a 3 to 6 months of consolidation. 4 months or 5 months of consolidation passed out, and I would probably believe that with the correction in the auto stocks or many of the large cap auto names in the last 2-3 weeks, we could probably be at a point where, say, in the next 1 month or so, you might see a breakout move which could come back into many of these auto names, including Tata Motors. So I believe that potentially in the next 1 to 3 months, you could see the stock breaking past about the 1,000 level. So I think in that anticipation is a hold.
All right, moving on to the next query, and this one is coming in from Srini. And Kunal, if you can advise him on Titan. He's holding 100 shares, buy price is 3,000 rupees. It's been 1 year that he's holding this stock, but in the next 1 year, any expected target price to look out for?
See, right now the stock is still trading below its 200-day moving average, which means that potentially the near-term trend for Titan could be a bit of a drag. If it crosses about the 3600 mark, and say even if it closes or gives a weekly closing above 3600 levels for say 1 or 2 weeks consecutively, then we could be looking at the stock coming back into a very strong recovery and potentially breaking past about the previous highs of 3800, 3850 mark plus for Titan. So it's a good stock, quality name without any doubt, but it's just that the near-term charts are a bit more on the negative side, which could probably indicate that the stock may consolidate unless it breaks past about the 3600 mark.
Okay, this one is coming in from Chandru. He's writing to us. Okay, he's not given the location, but he wants to know about Kotak Mahindra Bank. He has about 100 shares, which he's purchased at the price of around 1,748 rupees per share. He's been holding it for the last 3 years, and he wants to know now what should his strategy be in Kotak Mahindra Bank. Actually, let me take this query to you, Kunal. Given the fact that our viewer has held on to the stock, despite most of the banking names or the private sector banking names not participating in the up move that we've seen in the banks as a whole, as in if you compare it to the PSU banking counters. What's your take on Kotak Mahindra Bank now? 3 years he's been holding, 1,748 is the buy price.
I think the viewer is very, very patient enough because for the last 3 years, apparently, the stock has been a huge underperformer compared to many of the private sector banking names. But it's a quality franchise, a quality name. And when we look at the price patterns, the best part of which I like about Kotak Bank's price chart recently is that the correction which had happened for the stock in the last, I think, 1 or 2 months on the back of certain news flow, that entire correction is covered up in this leg of the rally for the price. It's come back about the 200-day moving average. It's closed the major gap which was created on that negative news flow for Kotak Bank about the 1800 mark. So I believe on the back of this, it looks like that the stock is coming out of a major 3 years of consolidation. I would probably expect that whenever the stock breaks past or gets into a momentum zone, we may not see a 10% or 15% rally, but we could be ready for at least another 30 to 40% upside once the momentum comes back. So I think it's a matter of patience. You've been patient enough for the last 3 years. Continue to be that for Kotak Bank.
All right then, and the next query, Ashish, is coming in from Ron from Mumbai, and he wants your advice on two counters basically. First is on CDSL. Is that a good buy for a long-term investment horizon? Is the first query, and the next query, I believe that he's already invested in IndusInd Bank, but now he wants to know, should he go ahead and make a switch from IndusInd Bank to ICICI Bank right now?
Yes, as far as CDSL is concerned, I think it was a good investment. I think you want to invest, right? The investor want to invest. So my session will be for a long-term time frame, and even 2,400 rupees. CDSL is just 25,000 crore market cap company, and the way IPO issuance are increasing and uh, their portfolio because they are holding major market share in depository segment. This stock has potential to touch even 3,000 rupees mark maybe in next 6 months time to remain invest and can invest even at 2,400 rupees per. As far as IndusInd Bank is concerned, I think IndusInd Bank, Kotak Bank, they are laggard in this rally. Uh, so my suggestion will be instead of investing in IndusInd Bank, now time has come to look again HDFC Bank, which can give you much better return than these stocks because a lot of portfolio allocation is going now towards HDFC Bank from other banks.
All right, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And just have a look at the screen, viewers, because it's more than 100-point gains coming in on the Nifty 50, while the Nifty Bank is also seen to be moving and for now is at the day's highest point. But with this, let's get back to all your stock related queries. And Kunal, coming to you for the next query. This one is from Shankar. He's a short-term investor. I would call it him a trader, but he wants to know that is this a good time to take a fresh position in any of the pharma names, any stock that you like at this point. He has Cipla as well as Piramal as some of the candidates that he's looking out for. So your view on the same.
I'll probably give two additions to this list. You can look at Biocon, which has been one of the top candidates, at least in terms of the chart structure, in terms of breakout. And the stock potentially, maybe, I think, looking to cover up the huge leg of underperformance it had seen from 2020 highs of 450 odd for Biocon. So that's a name to look out for in the pharma pack. You may also look out for Glenmark Pharma. Now, even after the steep run for Glenmark Pharma over the last 2 years or so, from 500 or 550 as a major bottom towards a point where the stock is almost at 1240 mark. The best part about the chart is that even recently we've seen higher influx of volumes for Glenmark Pharma, which has catapulted the stock from 1000 to 1200, 1240 plus mark. So I would believe on the back of this and the consistency of volumes, this could also be a good name to look out for.
All right, this one is coming in from LRG Reddy from Telangana, and he wants to know about two counters. Cupid, which is holding at the levels of 96 rupees per share, as well as Para Cables. I'm unsure if you tracked this one by any chance, Ashish. He's bought this one at 71 rupees per share. He wants your advice on both of these counters. If you track both of them, what's your take, Ashish?
Cupid, I am not finding anything interesting, and I think this is more trading kind of stock, if you ask. So I'll suggest to exit from this particular stock, along with Paramount Communication, right? Other stock.
Sure, because the stock that he's mentioned is Para Cables to us. Yeah, it is Paramount Communications. You're right.
Yeah, same. Again, this is a stock in a small cap category from 115. We have seen continuous underperformance in this stock, though turnaround story, but I think a lot of scaling is there in this particular stock. So my suggestion will be to exit from Paramount as well as Cupid both.
All right, the next query that I have is on Tata Motors, Kunal, and Javed is holding 251 shares. His buy price is 516 rupees. Already made great returns on this one. But continue to stay invested or rather make a switch to any other stock at this point.
I think continue to stay invested on Tata Motors. You just mentioned that my expectation is that the stock, whenever it gets into a recovery, which I think should happen in the next 1 to 2 months, you could probably expect the stock to break past about the previous highs of 1050 plus odd levels, which the stock had hit, and start to look attractive. In case if you are looking at adding on to maybe another auto stock or an auto name, I would probably believe Ashok Leyland is also something which will start to look very attractive at the 230 to 40 zone. This looks like a potential candidate of a major turnaround. So over the next 1 to 3 years. So if you have that kind of a time horizon, then I think starting to buy Ashok Leyland at current levels as well as on dips could be a good strategy.
All right, this one is coming in from Swati for a period of 2 years. She wants to know whether she should go in for EMS or should she look at Genesis International. She's saying she can take risk, so she wants an entry price. Kunal, what's your take?
So I don't track it very closely, but when I look at the charts for EMS, for example, the stock on the very recent time frame has moved towards 675 from 480 levels start of the month of June, or I think even below 480 levels. So I think a better entry point could be a midpoint of this range, say closer to 550, 560 mark. I'm not sure whether the stock would actually go into a correction because the beta of the stock is very high so far. So which means potentially the stock, you may have to wait out for some more time for the stock to come back into that sub 600 levels. For Genesis, the stock is placed at a good point. It's recently managed to break past over the 50-day moving average at 600 levels where it's trading right now. So you can look out for a target of 700 plus, even if you have a time horizon of 3 to 4 weeks.
All right, the next query that I have, Kunal, is coming in on Concor, where Nikhil Sharma is holding the stock from a price of 1140 rupees, and we all have tracked, like, after that 1000 odd mark is taken out for Concor, the stock did see a good move. But for Nikhil, should he stay invested to get back to his cost price, and should he stay invested more in expectation of some return?
See, there are 2 points over here. One is that, of course, the charts for Concor has been very strong. Current level could be a good level because the stock has ending a minor corrective phase for itself. So I think from 1140-50 levels, it's come back towards 1040-50 mark, which means a 10% broad correction seems to have happened for Concor. The concern which I see on the charts is for the first time in the last 2 days, rather in the last many months, or in the last 2 days, the MACD has started to get into a negative territory. And that generally indicates that maybe we might see more of a drag for Concor in the near term. So to put it into a very simple picture, I would believe that maybe the stock can fall a bit more. So wait out for that level where the stock say comes back to a 975 to 980 mark. That could be a slightly better point where you can look to buy Concor.
All right, this one is coming from Nagakumar. He's writing to us from Hyderabad, and a very surprising name actually to see the query on actually, Ashish. He's asking about MTNL, a stock that most of us have actually forgotten or don't speak about when you talk about the telecom space. MTNL has time and again been in news on that news flows, whether it will be merged with BSNL or any action on that particular front. But do you think this is a name that one should even look out for right now for a period of 2 years to invest, given the fact that the action is back in the telecom space, that the pricing power is back with the mobile operators?
I think there are 3 things happening in MTNL. Story built up, and story built up. Nothing is moving as far as fundamentals are concerned. I think in telecom sector, if somebody need to take a bet, then maybe at lower price segment should go with Vodafone idea instead of MTNL, because MTNL again, when this will get merged with BSNL or when the turnaround will happen, because now even government is not too much inclined for MTNL on a standalone basis revival for this company, and we like to see like how things moves in telecom space with other players. So my suggestion will be to exit from MTNL. I'm not expecting any major corporate development here in short period of time.
All right, Ashish, once again coming to you because this query is on Kaplan Point. Anipuri from Delhi is holding 1500 shares at a price of 400 rupees. Good time to book out profits and rather make a switch to Jubilant Pharma at this point in time. Jubilant Pharma, I guess. Jubilant Pharma at this point.
No. If you see the performance of Kaplan Labs it was quite encouraging last 1 year, the kind of return Kaplan Lab has given. Even other stocks have not delivered that kind of returns. Fundamentally, good stock. Only thing is it's slow and steady. It's not something like how other pharma stock move in a jiffy, then comes down. This is very stable kind of business. They make 120, 130 crore kind of profit every quarter and moving at a good pace. Though Jubilant Pharma is again another good story, but quite volatile compared to Kaplan Labs. So I like more Kaplan Labs compared to Jubilant Pharma.
All right. The next query that I have is coming in from Sanjeev Kunal. He wants to know about DCB Bank. How does this one look to you? Because we have the viewer who's already holding it with a 33% profit right now. Should he look to book out profits right now, reallocate that money to some other counter, or just stay put with DCB Bank?
See, I would believe stay put over here. I've been tracking the stock very closely over the last many months, especially the point when the stock had moved from 120 to I think 160 in a matter of 1 or 2 months, end of 2023 or start of 2024. And from there, the stock had gone through a major correction, coming back to that 120 mark. Now that major, that rally, the retracement, the recovery, I think all of that has played part for DCB Bank. The stock is retesting its resistances time and again, which means eventually it's getting ready for a breakout. And I believe if this leg of breakout happens for DCB Bank about the 145, 150 mark, you could probably expect the stock to even scale significantly beyond the 160, 165 mark, which it had hit in the last leg. So bullish on DCB Bank, but I would probably suggest that if possible, wait out for that breakout about that 145 mark for DCB Bank. That could really bring back the lost momentum for the stock.
All right, Kunal, once again coming to you. This query is from Balin, and he's holding SBI Life as well as Piramal Pharma. And what he's saying that these stocks are more or less stagnant. So a good time to move to Kotak Mahindra Bank or SBI at this point, or stay invested in these?
Well, I think if you're looking out for momentum, then it's a different ballgame altogether. But I think if you're looking out for profits at the end of the day, or maybe sustainability of trends for these stocks on the medium to long term basis, I would suggest to stay put into both Piramal Pharma as well as SBI Life. Yes, SBI Life has been a stock which has remained into more of consolidation, but the charts for insurance stocks are looking very strong in the current chart outlook. So I would probably believe that SBI Life sooner or later could get into a very strong breakout. Maybe a 15% breakout could be in the offing. Whenever the stock crosses about that 1550, 1565 mark. And same is the case with Piramal Pharma. After a decent rally, the stock is just about consolidating, trying to digest the steep uptrend the stock has already seen from those sub 100 levels, I think last year or so, towards now almost at 150, 160 plus mark. So good stocks, both of them. I would suggest a hold.
All right, this one is coming in from Jay Devappa. He's writing to us from Bangalore. He's holding 400 shares of Hiranba in his portfolio at a price of 350 rupees per share, Ashish. He's holding this counter for the last 2 years. He wants to hold it for more 3 years. Does it make sense to stay put with this one right now, or should he look to switch?
See, this is unfortunately not my tracking radar, so I'll not able to comment. Better to take technical view.
All right, Kunal, by any chance, have you tracked the charts of this one?
Yeah, I do track the stock. In fact, it's been a classical price volume breakout in the last 2 weeks, where you've seen the average volume jumping up to almost 10x in the last 2 or 3 weeks as compared to the previous maybe 10 weeks or 10 months of volumes for Hiranba. It's come back about the 200 moving average, and today also the stock has given a mild recovery, and that too sustaining about the 200 DMA. So it's a good price to enter the stock if you're looking to even have a shorter term time horizon. I would probably look out for targets in the range of 400 to 420 if this move of the stock in the near term gets into a strong momentum zone.
All right, one more query for you, Kunal. Sarma from Hyderabad is holding 100 shares of Hindustan Copper from a price of 368 rupees. We all have witnessed what kind of a move that the stock has given, but Sarma is sitting at a loss now. So should she go ahead and move out of this one or continue to hold on?
See, it depends on your time horizon. If you're looking at it, say, for the next 1 to 3 months, I don't believe that there could be anything major which could come back into the stock because of the way many of the indicators are poised. It's still into a sluggish territory, or for example, the MACD RSI are showing signs of negativity, which means that the stock may drag for, say, another 1 to 2 months at least. And I think in that time horizon, if you're expecting the stock to come back to your cost price, it could be a bit tricky. But I would probably suggest that if possible, and in case of the stock in this, say in the next 1 or 2 months, if it goes into a corrective phase further, if it comes to, say 280, 285 mark, that could be a very good level where you will look to even add further.
All right, this one also is coming for you, Kunal. This one is coming from Kaushik Mitra. He's writing to us on Inox India. 660 is his buy price for Inox India. He wants to know whether he should stay put with this or look to shift the money to some other counter altogether. Any scope of it actually rising further?
See, a bit of a limited chart history, I think only just 7 months or 8 months
Right.
of price history for Inox India. But even in that context, it still looks attractive. And, the last 1 month of chart, the stock had gone through a correction towards 1200 mark, come back to the 1350 levels, and now trading above the 50-day moving average. So price patterns, the consistency of price trend, the capacity of the stock to recover and try to come back into a recovery mode after a sharp correction, I think all of that indicates that maybe the stock could have a decent medium-term outlook. I would suggest to stay put.
All right, Ashish, the next query is coming in from Maveen Shah from Baroda. I guess he's writing to us for the first time and he wants your advice on Moil. He's holding 70 shares, buy price is 565 rupees. Can he go ahead and keep and stay invested for the long term? What I can see right now, he is indeed at a loss in this one.
Yeah, unfortunately, investors bought the stock at 52-week high, and from there, we have seen some correction, not in oil, but in other metal stocks also. But then maybe fundamentally, this company is very good, and the way metal prices have moved up in last quarter, this quarter they are going to come out with bumper results. So my session will be, in fact, at 480, 490 should be again a good level to average oil, and any new investor also looking at some quality play, PSU as well as metal, both flavors are there in oil and very attractive at 480 to 490 levels to add in the portfolio.
Right. This next one is coming in from KJK Chaudhary. He's writing to us from Ahmedabad. And Kunal, you did answer for Kotak Mahindra Bank, but between HDFC Bank and Kotak Mahindra Bank, which one do you think one can venture into right now?
Without any doubt, HDFC Bank, just because of the sheer size, the consistency of the stock and the recent price performance, where the stock has become the cynosure of the market in terms of or in the banking sector as such in terms of price performance. So I think undoubtedly HDFC Bank is one of the stronger names. But as I said, it depends on the style of investor, because if someone is looking out to play momentum and buy stocks which are strong leader names, I think for them HDFC Bank could be one of the best fit in that category. But if someone is looking out to buy the undervalued or the underperforming stocks and then looking out to ride the potential uptrend which could come back or covering up with the underperformance, then I think even in that context Kotak Bank could be a good bet.
All right, the next query that I have is coming in on PVR Inox, and if you can advise Smita Kunal, because Smita is holding the shares from a price of 1437 rupees, and what we have seen is that great moves on this counter after a long while, and that's after the blockbuster Kalki's, what kind of money that this movie has actually made. What's your advice on PVR Inox, Kunal?
There's an interesting technical aspect about PVR, and over the last 2 years specifically, that whenever the stock has spent say 3 months or 6 months below the 200-day moving average, and whenever the stock has managed to give a breakout above the 200 DMA, we've seen a rally of at least 10% to 12% for PVR. Now, the reason why I'm flagging this off, because the stock today I think is on the verge of a breakout above its 200-day moving average. So I think it's at 1520 mark, and the stock is currently at 1500 levels, which means potentially if the stock rallies say by another 1% to 2%, we could actually be at a point where this short-term rally could actually turn into a trend for PVR. So there could be a decent trade in the play, but it could be an anticipated trade right now because the stock is still below the 200 moving average, so you can take a bet accordingly.
Alright, so that's the take coming in on PVR Inox. On that note, we slip into a break on this edition of Buy Now Sell Now. But during the break, I would advise all of our viewers to go ahead and grab a notepad and a pen, because when we come back, a lot of stock a lot of stock names will be given out by our experts, so don't go anywhere.